So hello everyone and welcome to our very first webinar of 2021 and in fact our very first webinar ever. We've really been brainstorming how we can bring some more value to our clients and we've got a number of these webinars lined up. So we'd love for you to give us some feedback on how you find the webinar, but also if you have any topics that you specifically want us to address. So with that being said, let's get going. So I'm going to try and I'm going to moderate, or try to at least. So I'm just going to run you through some tech. So if you need your audio settings, they're right here. Please feel free during the session to submit any questions that you want us to answer. We'll probably keep those to the end because we've got so much to get through. And if you need to leave, you just click the button down here, but you're more than welcome to come back using the same link. So today's panelists, myself and my business partner, Teresa, and like I said, I'm multitasking and being the moderator too. We're going to turn our video off because we find it a bit distracting and it hides some of our slides, so that's why we've just disappeared. And
okay. Thanks, Lucian, and thank you to everyone who's taken the time to make it to our very first webinar. We are super excited to be here and speak with you about some really interesting topics. So to kick things off, we thought we'd start the session with a quote from Thomas Jefferson. If you want something you've never had, you must be willing to do something you've never done. These words were written about 230 years ago. And they're as true today as they were then. So if you think about this quote, it's all about making changes. And that's what this session today is all about. It's challenging you to do something different and to make changes in your business so that you can get results that you've never been able to achieve before.
So before we go through our agenda, which takes through 7 items, which we have up here, we've got to go through our usual disclaimer, which I'll just read at the moment. So it's that the information in this educational webinar, we hope, is general in nature and no substitute for tailored advice specific to your particular circumstances. So one of the biggest problems that we see quite often in small business is really the failure to implement. Don't you agree?
Yeah, absolutely. Taking that action.
Yeah, and if you don't write down your actions, you won't remember them. We've got so much to think about. We've got our personal lives, our business lives, social media. We're inundated with information. So if you don't write something down, how are you ever going to remember them? It's a bit like those New Year's resolutions that see, I can't even remember what they are.
I don't think much is going on in New Year's Eve.
And we really want you to get maximum value from this webinar. So if you've got any questions, like I said before, just submit them at any time. So today we're going to cover the need to make the choice to change. It's all about mindset and to develop a roadmap and dashboard for your business. We're then going to get into the 7 ways to grow your business. And my favorite part is the worked example, where we'll demonstrate how you can make a really small change and the impact on your bottom line is enormous and in cash as well. Then it's accountability time and you've got to decide what action that you're going to take.
So to kick off the first item on the agenda, the 5 A's of change. So like Leishan mentioned before, it's all about the mindset. You first have to choose to change. Change does not happen on its own, and there are 5 main steps in the process of change. So the first step is being aware that you need to change. It's really unlikely your business has been able to continue as normal given everything that's been going on in the world, and you know that changes need to be made. So awareness is that first step. The second step is to accept that you need the change. It may not be easy. Change doesn't come easily to everybody, but the alternative of not changing won't be easy either. In fact, it'll probably be a lot harder not changing in your business right now and staying stagnant. The third step, and personally I think this is the most difficult step, is taking action. So like Leishan mentioned before, failure to implement is one of the key reasons small business does not grow. You need to take action. So many people may respond to immediate actions in crisis mode, but that's just being reactive, not proactive. So by making a conscious decision to change, you have much better control over the process and the outcomes. The fourth step to make sure you take the action is ensuring that you have some accountability. So it's really important to find someone independent who can hold you accountable to your actions. Now, this shouldn't be your best friend or your partner, because they're not the ones who are going to tell you what you need to hear. So you need someone independent who can hold you accountable. And finally, the last step, which I think is also incredibly important, is take the time to acknowledge the change that you've actioned and implemented in your business. Take your team on the journey, give positive reinforcement, celebrate the wins and the milestones along the way.
I think just on that acknowledgement, that's almost as important as setting the goals, because it's all about that positive reinforcement and
the dopamine hits when you can tick something off and say you've done it.
Yeah. So getting from A to B, so this is all about building your roadmap. And before you can make a plan for where you want your business to go, you have to understand where you are right now. That's your point A. And then the impact of COVID is a perfect example of how things can happen that are outside of your control, but will impact where you want to be. And it's likely that where you want to be is much further away than you expected. And it's probably a lot harder to get to. So, and it's likely that that goal or that end goal, that point B, it's still possible. It just might take longer, or the route might look a bit different. So let's actually have a look at an example. So pre-COVID, you might have had a bank overdraft of $50,000, and you might have expected in 12 months' time that you would have $50,000 in the bank. So that's a cash increase of $100,000, which you can see there. Now, post-COVID, or during COVID, you might have had to spend an extra $25,000 because of shutdowns. Your goal is still to have $50,000 in your bank account, but it might just not take 12 months. It might take a couple of years, because your cash increase is now $125,000. So it's all about setting those realistic goals and being able to pivot when you need to. So I'd ask you, what does point A in your business look like now? Maybe you can put it in the chat below. Can you put it in the chat?
Yep, they can.
Yeah. They can? Yeah, that's good.
Do you know what your point A is? And do you know what your point B is?
Well, what is your goal? Where do you want to be? And what does your journey look like? It's all about planning. So getting from A to B, and this is what we're talking about, your plan. So now you know where you are as a result of COVID and you know where to go, you need to revise your plan. This could be reviewing and updating your existing plan, or it may even be developing a business recovery plan. So you go, well, which one do I do? And the difference is, if the impact on your business has been minimal, it's likely that you probably need to just update your business plan. However, if your business has been significantly impacted, you probably need to look into your business plan a little bit in way more detail, and that's called a business recovery plan. So this is where you'll kind of go back to point A, and you'll need to revise your personal budget to reduce the pressure on your business's cash flow. That's how much you take from your business. You need to determine what finance you need, and you know how long and how difficult it is to take finance. Even when you have the money and the funds available, it's hard.
It is.
Work.
It's cheap at the moment, but it's really difficult to obtain.
The banks aren't letting it go. And you need to revise your business budget, and you'll definitely need to recalculate your break-even analysis. But the process is really important because you get time to reevaluate your critical key performance indicators, which we'll go through in a moment, and you'll need to monitor those. But by doing this, you can identify opportunities, vulnerabilities, and quite possibly critical challenges. But the most important thing is you can pivot quickly. So we look at ours on a weekly and a monthly basis. And if something's not working, we change it. But that's what COVID taught us. We didn't always do that.
Yeah, true.
And you'll be able to identify risks, probably if you've got a big business in different departments, and mitigation strategies. You'll be able to set annual and 90-day plans to ensure that you just achieve, so that you can achieve your goals. So the number one takeaway from this is to write down your goals and commit to them. If there is no substance to the goal, it's merely a wish. There is no way, because there's no way to track, measure, or follow up anything. So your plans are essential. Let's look at an example. So in the past, you might have had a profit. This is for your budget, by the way. So you might have had a budget in your business of 150,000, but due to COVID, you've gone, well, I probably only need 130, right? Then you've gone through all your expenses, and we're working from the bottom up. So you've had a look at all your expenses and you've cut them. So they were 350,000. You've cut them down to 325,000. So your gross profit that you needed to achieve previously was 500. It's now 455,000. And we do this because just to make it more realistic for you. Now, say your gross profit was 39% for both scenarios. Look at the impact on sales. So you did have to get, say, 1.3 million. Now you're down to just under 1.2. And I think the positive mindset that this, because it's realistic, is so important. Now, of course, you'll need to develop this in way more detail. This is just a very high level summary. And then you need to break it down into monthly targets and monitor them so that you're on track.
Okay, so Leishan just discussed getting from point A to point B. So now that you know where you're going and what you want to achieve, it's time to set up your business dashboard. So if you think about your business dashboard a little bit like the dashboard on your car, like you can see on this slide, the dashboard on your car will show you how fast you're going, how much fuel you have left, and the temperature of your engine. It gives you an indication of whether you're going to make it to your destination or not. It's exactly the same in business. So it's really essential that you have a business dashboard. The things that are on your business dashboard are the key performance indicators, or KPIs for short. So they're the measures that tell you if you're on track to achieving your plan or not. We recommend that your dashboard for your business should show no more than, say, the top 4 or 5 KPI measures, because that way you focus on a much smaller amount of KPIs. If you had 20 or 30 KPIs in your business, you're just going to have numbers all over the place and you won't know whether you're coming or going or not. So by focusing on a smaller number of KPIs, it allows you to catch up, monitor, report, and improve them on a regular basis. Your most important KPIs will depend on the type of business you have as well as your goals. So like Leisha mentioned before, we have probably 4 to 5 KPIs in our business. Yeah. We review them on a weekly basis so that we can track and monitor how the business is going. And, if something isn't in line with our expectations, we can investigate the reasons why and start putting actions in place to get it back on track. So I'll take you through a couple of examples. For example, if you're a manufacturer, your most important KPIs might include gross profit percentage. It might include the cost of any rework of faulty products. It might include work in progress days. So how long does it take to make that product and get it out of the factory? And it might include debtor days. So how long is it taking for your customers to pay you? For a retailer, KPIs might be slightly different. So retailers' KPIs might include sales. might also include the gross profit percentage. And just keep in mind here, gross profit percentage is a really common KPI for most businesses across industries. We use it, and it's a really good basic measure of efficiency in your business. A retailer might also like to look at average client spend. So how much is a customer spending with that retailer, and transaction frequency. How often is that client coming back and spending money? It's really important that you work out the KPIs that you should be measuring and setting goals for improvement around those. So your business dashboard is essential so that you can regularly monitor how you're progressing.
Cool. So now this bit is all about accountability and how to engage co-drivers. So when you set goals, do you have someone to hold you accountable for what you committed to? We do. We've got business coaches. We can't do it with one another, but our business coaches keep us accountable all the time. And there are consequences if we don't achieve our goals. What are your consequences? Remember the 5 A's of change? One of them was accountability, and you simply must have someone independent hold you accountable to your actions. And like with us, there should be consequences for inaction. One of the worst is that your business fails because you're not moving. It's not rocket science. Having your spouse hold you accountable, like Teresa said, is not going to work. And good
They're
luck
going to
with
tell
that.
you what you want to hear, not what you need to hear.
And then good luck at home. So, in summary, lots
of car
analogy. So, we really want to. It's all about maximising the efficiency of your business and making it sustainable, minimising the wear and tear. So there's 4 actions that you need to take. First one is set an annual plan. What is it? A failure to plan is a plan to failure, something like that. Yep. You need to set an annual budget, which we talked about. Teresa talked about setting up and measuring your 4 most important KPIs. And the 4th one is you have to have someone independent to hold you accountable to your plan.
Yeah, and that's really the implementation piece.
Oh, it sure
isn't
is. Yeah.
Okay, so before we get into the 7 strategies of this webinar, what I'd like to take you through is this really cool model called the marketing flywheel. So it's really important to understand this model because this concept shows you how you can attract, engage, and delight customers. And the model also demonstrates that you shouldn't just always focusing on gaining new customers, but that you should also focus on delighting your current customers. So to start off the model, the first thing you have is strangers. So these are the people who haven't heard about your business before. You might like to do some marketing to introduce your business to these strangers. And at that point in time, they will become your prospects. These prospects now have an opportunity to buy from you because they know your business. When those prospects make a purchase, they become your customers. And if you treat these customers right, they will become your promoters. And this is the sweet spot because the more promoters you have, the more people you have to speak to strangers about your business, and so the cycle continues.
Circle of life.
It's like the circle of life, but it's the circle of business, which is why I love it. So in order to attract prospects to your business, you need to focus on providing value before you extract value. So I'll say that again. You want to be able to provide value before you extract value. So what I mean by that is think about what your customers will get from you by doing business with you and what problems can you solve for them. Then to convert prospects into customers, you need to engage them by making it as easy as possible for them to buy from you. So this is all about seamless transactions, and that really comes down to, the processes and procedures within your business. Your marketing is what attracts and engages prospects and then turns them into customers. Your sales process should ensure that customers continue to be engaged and are followed up with really good service. So that really, really is the key. Service is such a big key because delighted customers who get good service will share their feedback with strangers, creating more prospects, customers, promoters, and so the flywheel keeps going around. Your aim is to ensure that your marketing flywheel is spinning as fast as possible, converting more strangers into prospects, prospects into customers, customers into promoters, and round and round and round. And this is essential to help you grow your business.
So ignore what your parents said about not talking to strangers.
Yes, in this instance, yes.
Yes.
Okay, so now let's get stuck into the crux of our webinar, why you're all here, the 7 strategies to grow your business. Before we start, I'd like to point out that the 7 strategies that we're going to introduce to you on this webinar are really, really simple strategies that any business can implement. They're not rocket science, they're not complex. The key is consistency. So the first way to grow your business is to increase your customer retention rate. Statistics show that it's 6 times easier and cheaper to make sales to existing customers than it is to new customers.
Insane.
It is. So yeah, much cheaper to make existing to make sales to your existing customers. And how do we do that? By delighting them. So by delighting our customers, we make them want to return and therefore increase our customer retention rate. So let's stop and think for a minute. What do you do to delight your customers in your business? Feel free to share them in the chat if you like. One thing I want to note with this is that a lot of people don't necessarily measure their customer retention rate. If you want to grow your business, it's really important that you start measuring this. Just remember, you can't monitor and therefore improve something if you don't measure it.
And I think you can say if you haven't measured anything, just start now.
Yeah, absolutely.
Like there's no ideal time, like the present really. So the second way to grow your business is to generate more leads. So the best way to generate more leads is to surprise and delight your customers so that they become promoters, just as Teresa said, and they're going to provide you with more leads. Word of mouth costs nothing, and it's a warm referral to you and your business, so you will convert it a lot quicker. But you can't rely on your existing customers alone to do your marketing for you. So you've got to attract those strangers, and you've got to use your marketing strategies. There is a billion marketing firms out there that can help you with this. And one of the things that we learned is we're not great at everything. You've got to outsource some of these things to people that specialize in it. So like the marketing companies, and you've got to provide value. You go, how the hell am I going to provide value? Well, you can do this in a number of ways. You can, I don't know, maybe do a free download on your website. Maybe you can do a free trial of your service or product. Maybe you could even do a free consultation. But the whole point of it is to show people out there the problems that you'll solve if they engage your service. You could even survey your clients and find out what their pain points are and then go, this is what I can do to help you solve those issues.
Okay, the third strategy. So the third strategy is all about increasing your conversion rate. So again, we've talked a lot about measuring these things. Do you measure in your business how successful you are at converting leads, quotes, proposals into sales? And do you regularly review it and work out why you aren't converting more? What changes can you make in your business to improve it? A tip I'd like to share with you is a key to successfully converting sales is to ensure you're dealing with the decision maker. So don't deal with the gatekeepers. They are just a waste of time. You've got to get straight to the people who can make the decisions and make things happen. You should also consider offering, for example, a range of options. So the question for a potential customer becomes, well, which option should I buy from you rather than should I buy at all?
Increasing transaction frequency is another way to grow your business. So like I said earlier, it's much harder to sell to new customers. And I think Teresa said it's 6 times more expensive to sell to new customers than it is to sell to your existing ones. So it makes sense to encourage those customers to buy from you more often. So you can do this by sending reminders. We use MailChimp. Probably can too.
I'm sure a lot of you have received our MailChimp.
You can introduce VIP cards. You could maybe even think about offering special deals to your existing clients. Now, one of the things that when we've been with our business coaches, they're talking about once you send an email, then you send a text, and it's like a non-invasive touch point. So that's like SMS Global, Podium Text Magic, SMS Broadcast are all software systems that will just do those bulk texts. But I think we're all moving towards more of a CRM type environment, so that you can, because that will help you measure all the things that we've mentioned to you.
Number 5. So the 5th strategy to grow your business is to increase your transaction value. Now, when I say value, that doesn't necessarily mean increasing your prices. Think about how you could add more value to your customers. So, for example, could you provide your customers with a range of options? Do you have a free information booklet with tips and tricks? Is it even clear what your business offers? So don't assume your customers know what you can offer. You need to tell them. And as McDonald's do, follow the would you like fries concept. Would you like fries with that concept? So it's an oldie but a goodie. So we were thinking about how this might apply in our business. And we thought, well, would you like a tax return with that? Doesn't quite have the same ring to it. Adapt it for your business. And really importantly, and this is really important, don't devalue what you offer straight away by offering discounts unless the customer has purchased an add-on.
That's easier than me working out how to do it. Okay. So we wouldn't be accountants if we didn't talk about costs. So we're going to move on to variable costs now. And these are the costs that increase as your sales increase. So these are things like direct labor, cost of materials, and probably sales commission is another one. So it's all about how hard is that variable cost working for you to produce a sale. And it's all about implementing better systems. So if we're talking about direct labor, then it's a better system to accurately record time. It's cost of materials. It's a better system to record material usage. And it's also, as you need to look at implementing strategies to reduce rework. So for us, for example, when we do your year-end work, when it comes to us for review, it should be perfect. And we've got systems and procedures that the team follow so that they can produce a good quality piece of work, which prevents rework. And Teresa spoke about a gross profit being a measure of efficiency. This is what affects your gross profit. And it should, or you should use it to prevent wastage as well. And if you implement all of that, your GP should increase. And that's the value of your business.
Okay, lucky number 7. So I guess in line with us being accountants and talking about numbers, Leishan just spoke about cost of sales or direct or variable costs. I'm now going to talk to you about how you can reduce your overheads. So they're the fixed costs of your business. So things like rent, telephone, office supplies, etc. How often do you review your overheads? Best practice is that it should be done at least annually. So in our business, we'll usually review our overheads at the same time as when we set our annual budget. So it's really important that you do that. And the easiest way to do it is go through your annual financial statements line by line and identify overheads you could potentially reduce. A really common one we see is subscriptions. So how many subscriptions are there out there at the moment? Millions. And I bet there's subscriptions in your business or even in your personal life that you pay month on, month in, month out that you don't use. Get rid of it. Other ways to reduce overheads, you might be able to negotiate, for example, better terms for your utilities and rent. And there's been a lot of opportunity to do that during COVID, or reduce the amount of office supplies that you're being used. A decision process that Leisha and I go through when considering costs in our business is, will it make the boat go faster?
That's a good book to read, by the way.
Yeah, great book. So what that's about is, when you're spending $1 on your business, will it make your business grow? So on the flip side of that, when cutting costs, just make sure you don't cut costs that drive growth in your business. So things that might increase sales or create new customers or reduce your tax bill, they're the costs that you don't want to cut, and might include things like marketing and consulting costs.
Cool. So now this is my all-time favourite part. This growth equation shows you how small changes can have a massive, it's almost like exponential impact on profit. And by monitoring your KPIs, you can play with this growth equation so that you can set goals for improvement. And it really shows the 7 ways to grow your business points in action. So let's have a look at this scenario here. And I'm going to walk through the base scenario, and then Therese is going to show you the tweaked version in inverted commas. Okay, so say we had 765 existing customers and your retention rate was 85%. So you retained 650 customers. Easy. Your number of leads or inquiries was 145, and you managed to convert 50% of those. So you ended up with 73 new customers. So your total customers are now 723, of which they transact with you 1.1 times per year. And you go, what the hell is 1.1? Well, it's just an average, so go with me on this. Your transaction value is $1,560. So your annual sales is 1.2 mil. Your cost of goods sold is 70% of that, and your overheads are $265,000 in this example. So your net profit is $107,000. We use a basic multiplier of 3. This is not how we would ever value your business, but just for the purposes of this example, that's what we're going with. And your business is valued at $321,000. Now, Therese is going to tweak this, and it's so awesome.
Okay, so Leisha just went through the base example. What I'm going to take you through now is how we can tweak the base example using some of the strategies we talked about. So we talked about the first way to grow your business is to increase customer retention rate. So let's say the business in this example implements a customer loyalty program and creates a customer Facebook. So this results in an increase in the retention rate from 85% to 90%. And as a result, the business now has an additional 39 customers. Let's say now that because of COVID, the same number of inquiries have been received. That has not increased. And the conversion rate drops to 45% due to the impact of COVID. So this means that this business now only acquires 65 new customers during the year. So total customers went from 723 to 754. However, the customer loyalty program that this business has implemented means that existing customers and the new ones now make an average of 1.3 transactions per year, and the transaction value has increased from $1,560 to $1,600 per transaction.
That's not much.
It's not a lot. And if you exactly, it's $40 per transaction with not that many new customers, but have a look at the end result. Look what it does to your annual sales. So just by making those few tweaks, keeping in mind that this example also has taken into account some decreases because of the impact of COVID, but that could be, it could be natural disasters, it could be anything. Annual sales still increased from 1.2 mil to 1.5 mil, which is incredible. So now let's look at the cost side of things. So let's say this business negotiates better terms with their suppliers and cost of goods sold has reduced from 70% to 65%. Then let's say expenses on the flip side have increased. Again, this might have been because of COVID shutdown. It might be because you've expended additional marketing costs in your business. what all this shows, so the end result of this is that your net profit has jumped from $107,000 to $248,000. That's an increase, if my maths is correct, and I'm not very good at adding up in my head. Oh, it shows us there. $141,658 to be exact. So again, if we use a basic multiplier of 3 to value the business, then the valuation has increased from $320,000 to $746,000. So that is an increase of $425,000 value in your business. So as you can see by this example, you only need to make small, consistent changes. And as a result, this business has more than doubled their net profit. So it's really a matter of focusing on delighting your customers, retaining more of them, then they're likely to buy more from you and at a high value. So this is just an example, and your numbers might be different. We actually have this growth equation calculator. It's a super cool tool, and if you're interested, contact us. We'd be more than happy to sit with you and show you how small changes in your business can really impact the end result.
Yeah, it's really cool.
It is
I
cool.
love that.
Yeah, well, we're accountants. Can you tell we're excited by all these numbers?
Okay, so we all know this quote, or we've all heard it before. So insanity is doing the same thing over and over again, but expecting a different result. So we all know this, right? But what are we going to do differently this year? I mean, it's really about, I'm not going to be rude, but there's a saying about getting off the toilet. Isn't it?
I don't know.
Okay, well, forget that, but you got to do something, right? That's what COVID taught us. You can't sit still, otherwise you're going to disappear. So we've got 4 choices. Oh, there's Albert Einstein for us. So you can do nothing. You can basically sit here, watch the webinar, say, yep, I should probably do things differently, but change seems too hard, walk away. Good luck with that. You can retreat. So you might try a couple of things. It's like a habit. Try a couple of things, fail a couple of times, and then you just end up doing nothing. Failure. Or you take normal amounts of action. So in this one, you might tweak a few things here and there. You have some quick cash flow wins, but you don't fundamentally make that choice to change. You don't commit to your actions. And so those quick actions, or those quick wins, just evaporate, just like the cash will. This is my favorite. You take massive amounts of action. You commit to change, and you go, my business is here to serve me and not the other way around, but you commit to that change. And that's the most important note, I think, out of all of this. Yeah. And you follow through. So as the old saying goes, if you do what you've always done, you'll get what you've always got. But that's not possible in this environment, people. If you do what you've always done, you'll get less than what you used to get.
Okay, so how can we help you with all of this? So like Leishan mentioned in the disclaimer, the information in our webinar, it is general in nature and it's no substitute for specific tailored advice for your business. So there's several ways that we can help you beyond today's seminar. So the very first one is, so for all attendees to this webinar, and thank you again, we're so glad you have supported us with our first webinar. We're going to be emailing you after this 7 ways to grow your business action list. This is really cool. It's a very simple piece of paper that lists the 7 strategies, and it prompts you to think about, how you can implement some of these strategies in your business. And we're more than happy to provide you with a 15-minute complimentary phone call to run through those with you. If you would like to dive deeper than that, and if you don't already have a business plan, we can help you develop yours over, say, a half-day session so that it's tailored to your business. Further, if you need a bit of accountability and you'd like some independent accountability coaches who will tell you what you need to know, not what you want to hear, then we're more than happy to meet with you, say quarterly. Yeah, to crack the whip. Meet with you quarterly to review and reset any goals and actions in your business plan. We also offer more regular coaching if you'd prefer it more frequently.
Cool. So now it's question time. I'm going to put my moderator hat back on. So let's have a look. So we do have a couple of questions that were emailed at the beginning. And one was, what should my starting point be now, given it's mid-year? So I think, do you want to take that one, Teresa, or shall I?
You can take that one.
Take it. So I think the starting point always is getting that business plan, because you can't measure something if you don't know what you're measuring.
And if you don't know where you're going. Yeah.
So it's those SMART goals. They've got to be specific, measurable, achievable, realistic, and time-bound. You know, we've heard that so many times, and it's so true. You need to monitor cash flow. You can start that at any point. You can start that today. Have you done your tax planning? Do you know what your tax obligations are going to be, for example? That's what we call lumpy cash flow, and it sucks, but you've got to manage it, and it's all about how you manage it. Okay, let me have a look at these other ones. Okay, so how do we get accountability when we don't have it? You can take that one.
Sure. Okay, so how do we get accountability when we don't have it? The first thing, and we keep going back to setting these goals and having a plan. So you can't have accountability if you don't know what you're being held accountable for. So the very first step is get those goals written down, and then find an accountability partner that is right for your business. So like we said earlier, it shouldn't be a spouse or a best friend, or it should be someone who's going to ask you the tough questions and hold you accountable to the actions that you've set for your business.
Cool. Does anyone have any other questions? We might move on.
Yeah.
Cool.
Okay, so to leave you with a parting thought from the guy who mentored Tony Robbins, Jim Rohn. Success is Success is neither magical nor mysterious. Success is the natural consequence of consistently applying basic fundamentals. So this is all about being consistent with simple plans. It does not have to be rocket science. Make a simple plan today. Commit to at least 3 actions you'll take as a result of today's webinar. Write them down, give each action point an owner and a completion date. And I'd like to suggest that you start, your first action point should be that 7 ways to grow your business action list, which we'll email to you after the webinar. It's a really great starting point. And remember, if you need our support, we are here for you always.
Well, so thank you for taking the time to attend this seminar. We really appreciate your time. We know it's very valuable. But if you could, what do you do?
I'm trying to put our faces back on so you can see us.
But if you can fill out the exit survey when you leave, that would be greatly appreciated. And we're open-minded, so feel free to suggest any improvements we can make to the webinar, any topics that you want to see in the future. But we do hope we've given you plenty to think about and some clear next steps for you to take. Our next webinar is Know Your Numbers, like I said at the beginning. So with that, if there's no more questions, then we will exit the seminar, and we thank you again.
Thank you for your time, everybody.
Bye.
Bye.